Hello again. We are now moving to the second part of our business week, the first day, of course. I would like to thank everyone for being here. VP Butani, VP Andreou, Dean Zenkos, and the rest of the heads, and of course all professors and all students. The introduction, the next, not exactly speaker, but someone who's going to make some very interesting points. His name is VP Andreou. Vice President Andreou is on the front line. I should say this. You remember one of our speakers made that point earlier, that whoever's on the front line has a very important job. Vice President Andreou, he's responsible for administration, he's VP for administration, but also for enrollment. So let me make a point. It's the first time in this college that very seriously, under the leadership of our President Horner, we have very specific units which take care of issues which we should have taken care a long time ago, if I'm permitted to say so. So we have Vice President Andreou, who is really taking care of the enrollment, and you all know that in this crisis we are among the very few schools with an increase in our enrollment. That is revolutionary in the crisis. So we should certainly respect VP Andreou for this huge success. And you know, leaders are described if you respect them and you trust them. So we do trust them. So we would like to call Vice President Andreou to come to the pond and take over and make a few points, and please give us a picture of what's happening, or before we start.
Thank you very much for your very kind words. Indeed, we are trying, not just me, but a lot of other units, including marketing, with VP Deree, sitting also in the front row, to do whatever we can to improve enrollment, not just increase, improve. Better students, more students, better quality, good mix, national, international, all these things. So I think we'll have a great year. Indications for this academic year, for this coming fall, are very strong, both for Pierce and Deree. So we'll keep you posted on this. Now, with respect to Business Week, last year I had the privilege to introduce a good friend of mine, Speaker Papageorgiou, who, after becoming familiar with the American College of Greece, decided through his alma mater, one of his alma maters, the Phillips Exeter Academy, to become a donor to the school. And in fact, this year, 5-year students will be going to the Phillips Exeter Academy on a scholarship, fully sponsored by one of our Business Week speakers, Mr. Papageorgiou. Now, George, I'm raising the bar, as you can see, for you, because I'm sure that one day, if not already, you'll be very successful, and perhaps you will come back to the American College of Greece and associate in a more, I guess, in a more in-depth way. So that takes me then to the introduction of George Papageorgiou, an ex-student of mine, while he was doing his MBA at the University of Greenwich. Our last association as a student and professional, I must say, was one of my best students, was in the UK at the University of Greenwich, where I was co-teaching a course in integrative workshops and knowledge management. George has been a very fascinating individual, I would say. He started his career in the Hellenic Health Force, fixing, maintaining, improving jet fighters. He then moved into managing technology projects, innovation, intellectual property management, patents, and recently he has been the Chief Development Officer for the largest, actually, startup company in the field, a company called NEO&B, or BOME, which is incorporated in Cyprus. This is, I think, his presentation is going to put all of us in a very fast-forward mood, because he's going to talk about a very new and disruptive technology related with digital money, bitcoins, generating online payment platforms, all these things that perhaps some of us or others are questioning, but this is very normal. When you start with new technologies, there are always people that will question the viability of these technologies. The same happened with the internet. So it's absolutely normal to hear some voices of concerns or some doubts about these technologies. The good thing is that George is helping in a new innovative technology. In fact, he was telling me that the University of Nicosia has now accepted to work with its company, UNB, and they will be starting a new master's in digital money. So I guess there is some interest also from an academic perspective. So George, thanks very much for accepting our offer. It's a pleasure to have you with us at the Enrollment.
Thank you very much, Mr. Andreou. It's a pleasure and an honor to be here, even though I know that the hour is late and some of you might be very tired. I intend to push those limits a bit further, if I may. When Mr. Andreou invited me here, he told me that the business week of the college is about speed, staying one step ahead, being global, but at the same time paying attention to individuals. So I told him, you're essentially doing the whole conference on Bitcoin, right? And it proves that I'm the only speaker regarding this technology here, and I'm ashamed to say as a Greek that it hasn't taken larger exposure in this country. While we're based in Cyprus, and we've had international business interests from all mainstream media, all the way towards Japan, the US, and the rest of Europe. But there's not much exposure here yet. So I'll spend the better part talking about what Bitcoin actually is, and perhaps how you can integrate it in your future ideas for startups. And on some part, I'll try to talk a bit about what we're doing in Cyprus and what kind of services we're developing. To pick up from where Mr. Andreou left, and it's very hard reaching up to the level of Mr. Bua said for now, but at least we'll definitely be able to discuss about some internships if that is something that you'll be interested in. I'm sure we'll expose your students to things they haven't imagined yet. So let's start about talking about what Bitcoin actually is. Because it's usually hard to pick up on a new technology which is comprised of so many different elements that already existed in the market, but no one had combined them in this kind of way. I need to see a show of hands. How many of you know about open source projects and Linux software? All right. It's going to be more challenging than I thought. So how many of you know about peer-to-peer programs like torrents? All right, much better, much better. Because we all need movies, right? So Bitcoin is at the same time open source as a software, which means that it's available to anyone to see, to inspect, to suggest improvements. At the same time, it's peer-to-peer. So it's managed on a peer-to-peer basis. It has no central structure. It has no central server that works. Everything happens by users communicating with each other. And it's also mathematically secured, which means that every process that operates on this network is governed by the laws of the universe, the laws of mathematics that say that when 2 plus 2 will always be 4 and will never be 5. And so a system was built based on these technologies which presents an asset ledger. What we call it the blockchain. And it's a detailed ledger of every transaction that's ever happened on this network. So essentially what happens on this ledger is that everyone shares this ledger and communicates with each other for the updates, for every new transaction that happens. So every transaction is available to everyone. The software is open source. It operates by rules that everybody agrees on, and it doesn't have a central point of failure. Essentially what this means is that the blockchain can be swift, but for every person. Now when we want to do a wire transfer from one side of the planet to the other, we go to a bank. This bank communicates with SWIFT. and changes a few numbers on the digital ledger on the ownership of these funds and transmits a digital message to the other bank on the other side of the planet, then you go to the other bank, to that bank, and you pick up the cash. But essentially what happened was a transfer of information. And this information so far, and ever since we knew transfers of financial information, began with the telegraph, late 1800s. It was a transfer of messages, and this is exactly what's happening with Bitcoin as well. But to have a message which is clear and objective, you needed to have a central source of authority. Someone who verified the ownership of what belonged to whom and transmitted the funds and made the changes in the ledger. So if this central authority was hacked, then no one knew what belonged to whom. So the blockchain, Bitcoin technology, allows everyone to transact with everybody else on this decentralized network without having to know who the other person is and without having to trust whether the Bitcoins will actually go there and without having the possibility of anyone intervening in the middle. So essentially it's the first time in human history that you can send something at a distance without anyone actually telling you that you cannot do this. With email, this is not quite possible. For financial information, this is by far the first time that this happened. So, what can the Bitcoin network do? The Bitcoin network operates on a very simple set of rules, and it allows very simple actions to take place. So anyone who has a digital wallet and some Bitcoins on one side can send them to any person, much like you would send an email. Only this email would be spread all over the planet to every node that operates the Bitcoin protocol and would be verified by every single person running the software. If it's an illegal transaction, if it's a transaction which is not permitted by the protocol, it's not going to take place. And every user makes sure that this happens. So in order to agree on the transferring of these units, these digital units that we call Bitcoins, it's unfortunate that the person that invented the software did not use a different name for the protocol itself and for the units that are transacted. So that's probably the only fault of the whole system. So we use a capital B to describe the protocol and a small case B to describe the units that are transferred. So everybody needs to play by the same rules. And these rules are these, that there will only be 21 million infinitely divisible units. This means that it introduces, from a monetary theory aspect, it introduces scarcity in the system. So, but at the same time, it introduces infinite divisibility, which means that even if there's only one unit available, we can divide it as many times as we want to facilitate the whole global economy. Another rule is that the introduction of new Bitcoins in the economy will occur at a predictable rate every 10 minutes. For the first 4 years of the protocol's operation, this rate was 50 Bitcoins per 10 minutes. For the following 4 years, it is 25 Bitcoins. And in 2016 to 2020, it will be 12.5 Bitcoins. So the rate drops as we move forward. And the third and final rule essentially is that all transactions are final. Once the transaction takes place, you cannot take it back. Because this would defeat the point of the whole system. So what if someone, you say, wants to change the rules, wants to put 22 million Bitcoin so he can make some more? He will have to run a different version of the protocol which he's changed to operate in a different way. But the thing is that since it's open source and everybody has to see what you're doing, no one else will accept him. So the whole network will essentially reject every suggestion that goes against the benefit of the many. So it's a consensual system in this sense. You need to have an absolute democracy to actually make a change. So all the changes that are being incorporated every now and then, they're all changes that everybody agrees on. Thanks for all you guys that are coming. And there's this thing that we hear in the news sometimes about mining Bitcoins. You can actually produce Bitcoins out of nowhere. And that was a fact until late 2012, early 2013, but now it's become a very complicated process and it demands a lot of processing power. And there's industries going that way, so it may not be advisable for everyone to actually practice this processing. But essentially what mining does is very, very important for the operation of the network. The mining process verifies that all transactions take place and that all transactions cannot be reversed. So they're locked cryptographically as we move on in this blockchain. And to reverse a transaction, you essentially have to do the whole process, the cryptographic process again, which is extremely difficult. It's statistically impossible to actually do. So for this work that they're doing, they're getting rewarded with the new bitcoins that enter the economy. This system is called the proof of work scheme. And right now, the energy and the processing power that protects the Bitcoin network is the most powerful distributed computing network on the whole planet, by far. So, back to monetary theory. Why do Bitcoins have an exchange rate? Back in 2010, someone sold 2 pizzas for 10,000 Bitcoins. Right now, that person would have close to $5 million. If that happened. But that was not a monetary transaction. It didn't involve euros, it didn't involve dollars or anything. Probably what happened was that Bitcoin became more useful after that point. The scarcity factor was still there. So you could always have up to 21 million Bitcoins, and that's it. But they became more useful. They became more useful because more businesses started accepting them as a means of payment. More users started seeing that you could send them on the other side of the planet with the speed of light, and it would cost absolutely nothing. One of the biggest monetary transactions that actually took place on the Bitcoin network was the equivalent of a value in dollars of around $160 million. And this cost precisely nothing. If you had to do that with a conventional system, you'd be looking at, I don't know, do we have any backers here to tell us how much that would cost? It would probably cost a couple of million just to send. And it would probably take days. So, Bitcoin are useful and they're scarce. And this means that they have some kind of value. As long as they're scarce and as long as they're useful, they will have some kind of value. That doesn't necessarily mean that they need to have an exchange rate or that they will always be exchangeable for euros. But we're trying to find this place in the market. So let's do some myth busting while we're here. Typical first thing we see on the media: Bitcoin is used for money laundering because it's anonymous. Both things are very wrong. Bitcoin is not anonymous. Bitcoin is the most transparent system of value exchange on the whole planet. Any transaction that you do, if it's traced back to you, it stays forever in the blockchain. So not only you cannot make anonymous transactions, it could be traced back to you even after tens of years that you did this transaction. To quote Jennifer Sasky-Callery from the FinCEN, the Financial Crimes Enforcement Network, which is under the Treasury Department in the US, that US dollars and cash is and will stay the best means of money laundering because it's completely anonymous. You give it, you throw it somewhere, and that's it. With Bitcoin, you can trace everything back. That's why the FBI has been very busy catching people who are operating on the Silk Road, the online exchange. They've been busy the last months keeping them up. Besides that, Bitcoin is like the whole economy is 8-9 billion right now. From the World Bank estimates that there's about $500 billion traded in money laundering every year. So Bitcoin cannot even compare to this. Bitcoin is a bubble. How many have heard of it? Okay. Well, Bitcoin is a bubble. But there was a bubble back in 2010. And then there was another bubble back in 2011. And then there were 2 bubbles in 2013. And soon when the price starts going up again because of demand, people will start saying that it's still another bubble. But that's just volatility. That's a volatility with technology which is trying to do what the economists would say it's price discovery phase. It's searching for a place in the market. If we check back to data from the early 1800s, when late 1800s, early 1900s, when oil was starting to be traded as a commodity, you could see tremendous volatility up there. You'd see 50%, 60% shifts in days. And that's the same thing that happened to Twitter. If you check the pre-IPO price of Twitter, the same thing that happened to Facebook. So the pattern here is that it's an emerging technology. Emerging technologies need to find a place in the market before they're evaluated. But still, since we're talking about value, Bitcoin's not a stock like Twitter or Facebook. Bitcoin's a technology. And technologies don't go like a mountain. Technologies go how to call this, the logistic curve. It's an S curve. It looks like a big S. It starts small, then it does a sudden uprising, and then it plateaus in the middle, close to the end, when it reaches 90 to 100% of acceptance. So Bitcoin is a technology, essentially. And technologies either get adopted or they don't. There is no middle ground. Unregulated nature. Bitcoin doesn't fit in any conventional box of an asset class. Is it a commodity? Is it a share? Is it security? Is it an asset? It is an asset. Is it a financial instrument? Or is it something else? We're having an interesting discussion before with you about what Bitcoin could be called the first precious digital commodity in the end. Because it is precious, you can't replicate and copy-paste them around. Because you don't decide how many exist, and you depend on others to prove that you actually own them. So it's going to be hard, but that's always the case. Innovation takes place before the regulation. Until regulators figure out exactly what interests are hurt in the background. Is it banks and central banks? What's it better? What's it more suitable for our policy this year to define it as a currency, or do we define it as a financial instrument and tell Goldman Sachs first, which we published a 35-page document like they did 2 weeks ago, to take advantage of it? So this will change in the future. People are starting to realize we insiders, we're having intense talks with the regulators there, and they're trying to figure out exactly what's going to happen. The same in the US, New York, Ben Losky, the superintendent of financial services, is trying to get the Bitcoin license out for businesses that want to operate with Bitcoin. Same in California, they're passing a law that is trying to characterize the whole virtual currency schemes. At the same time, hackers. Bitcoin has never been hacked. The only thing that's been hacked is systems and businesses providing Bitcoin services, like Mt. Gox, as you see in the bottom. But the Mt. Gox is not Bitcoin. Mt. Gox was a bank. Like eBank failed in March 2013. Did the euro fail? No. If Gmail gets hacked, does email stop existing? If a plane falls, does the air not work anymore? So, failure of a service does not mean a failure of the technology behind it. But we could argue a lot more about this because it's important for the difference between conventional systems and how systemic risks work in modern economies and modern technologies and how they work in the Bitcoin space. So Mt. Gox failed. I don't know how many of you have heard about it, but it was a catastrophic fail of a first-generation business built in a garage by a person who thinks that Ph.D. is the most magical platform on the planet. Mt. Gox took a lot of people's money with it, and those people were responsible for this. But it left everybody else unaffected. There was no systemic risk for the rest of the Bitcoin community. It left, it died, and we're all better because of this. Because people will learn how to trust next generation businesses who have actually transparency methods and methods in the background to keep the Bitcoin safe in a provable way. Not just say, oh, send everything to me, I can handle it, no way. That's change for you. As a payment system, National Geographic said that credit cards spend and make billions to achieve what Bitcoin does essentially for free. As a fluid payment system, Bitcoin can change the planet and bring financial services to every part of the planet which does not actually have a bank account. This would seem very strange to us, all of us here, but if you check Sub-Saharan Africa, if you check Southeast Asia, which at this time is more than 50% of the global population, you probably see that about 3.5 billion people right now on the planet, they're unbanked or underbanked. Means they don't have access, they essentially don't have access to the global economy. They can't buy anything from anyone. They don't even use cash. That's why cash has been replaced in Kenya and other countries in Sub-Saharan Africa. And you know what they trade with them and how they trade? They trade with mobile airtime. Because they have cell phones, because they don't have banks. They can communicate digitally. They can send SMS to each other, but they can't send a check to buy one thing. They simply don't have cash to do that. So Bitcoin allows all these people to actually download a portable wallet in their cell phone and actually start participating in the global economy. They can post a service or a business offering they want to do online and get paid immediately. So Bitcoin can actually change the world. That's how we feel. And let's see how other business leaders feel, and some of them you probably know. Bill Gates said that Bitcoin is a techno tour de force. I'm the first person who's guilty who didn't know what tour de force means. So I searched on it a bit and said it means that it's an incredible achievement that happens once in a lifetime. And that means a lot to me. Eric Schmidt, the chairman of Google, said Bitcoin is a remarkable cryptographic achievement. The ability to create something which is not duplicable in the digital world has enormous value. And I agree with him as well. The technology in the background has as much value as if you could split the internet in shares, in 21 million shares, and ask what's the value of that share right now. 20 years ago, what would the share price be? It's one of these things that's easy to quantify because we don't have, well, we're at a very early stage. We only have the AO, maybe the Netscape of Bitcoin. We don't have the Googles yet. We don't have the Facebooks. We don't have the Twitters. And these are the things that are going to leverage on this value for future generations. So, Richard Brown, executive architect of IBM, in the banking field in the UK department. If you need ideas, I would humbly suggest you resolve to understand this system and think through the implications and opportunities for your business. So, when new technologies come about, there's always skepticism. I'm definitely sure that this happened, even in I've seen it personally happen from my experience, but it definitely happened when the fire was, the first person that brought in fire, the other caveman just threw him away. So there's always fear, and there's always excitement, and there's always mixed feelings when you're encountering a new technology. Henry Ford's lawyer said, I don't think that car you're building has any real importance. Because of course, the force is here, it's always been here, and it's here to stay. So the funny thing is we don't know who the lawyer's name was. We all remember Henry Ford and the Model T. Television won't last, it's a passing fad. And my personal favorite, the Western Union Telegraph Company. The telephone is inherently of no value to us. Yeah, good call. Yeah. So, Douglas Adams, one of my most favorite writers ever, has a beautiful, beautiful saying that anything that is developed before we turn 35 is exciting, and whatever comes after that is treated with suspicion. So, most of you here are very young, so I'm sure that you'll be excited about all this. Now I think I'm going to start at the part where I'll say a little bit about what we're doing in Cyprus and why we feel that Cyprus could be the Bitcoin Valley essentially in the future. as a central hub of financial services for the whole planet, and how it feels like to be in a startup that's working on one of the most disruptive technologies on the planet right now for the last 6 months. What are the obstacles that we face? I don't know, how much time do we still have? Okay. About 10 minutes? Yeah? All right. Great. So, we started NEO and B on the principle that Bitcoin can change the world and can provide financial services. It can reduce all kinds of fees that exist now in the intermediary services, because essentially Bitcoin protocol is for free. And when people want to send money from one side of the planet to the other, they should be able to do just that, without asking for the money to pass through 5 different banks in order to reach their destination. Keep in mind that all those other systems were developed long before the internet. And they're still pushed on as the cutting edge of technology, which is not. So let's change the presentation and go to the other topics.
Can we ever have a normal haircut without being reminded of bailings, unscrupulous bankers, and vanishing deposits? And when we make financial transactions, will we not wonder what new restrictions the banks may impose on our own money? The time is ripe for change, and change is indeed coming. As conventional monetary systems continue their downfall, consumers lose their trust. They fear for their deposits, their life savings. The insecurity grows and grows in a never-ending downward spiral. But as in all such circumstances, when the need for change and reform becomes so intense, new opportunities always arise. Innovative, safer ways for financial transactions, and the way we store our own wealth. And we're certainly not talking about hoarding money in mattresses, under floorboards, and or personal safes. This is about a true revolution, the emergence of a new currency, Bitcoin. Bitcoin is a digital currency and is decentralized by design. Unlike the euro, the dollar, and all other fiat currencies, it's completely independent from banks or financial institutions. This allows for direct and borderless transactions between two people with much lower fees regardless of the amount. When receiving a payment, Bitcoins are stored in your digital wallet, a personal account that you and you alone have access to, thereby making you your own personal banker. You can use your Bitcoins to purchase products and services online and in retail locations. You can also trade Bitcoins for fiat currency and vice versa through worldwide exchange services. The highly sophisticated mechanism in which Bitcoins are generated and transactions are authorized ensures they can't be counterfeited. What's more, Bitcoins are generated at a limited and predictable rate. So as the currency gains acceptance, its value rises and rises, allowing for great investment opportunities. Introducing NEO, the world's first physical portal for digital monetary services that promises to strengthen the reputation of the Cypriot financial services industry. It is unique in that it offers the groundbreaking potential of Bitcoin, whilst eliminating the technological complexity and associated risks. At NEO, individuals or businesses can easily create wallets, store their money in Bitcoins, and can either choose to have full exposure to the currency's fluctuations or opt to have their money protected against volatility. In either case, customers can exchange in and out or transfer either Bitcoin or euros virtually hassle-free. With new wallets, customers receive a B card. B offers instant settlement times and higher security than competing payment processing services in Cyprus. Most of all, B has zero transaction fees and saves substantial funds for any merchant who accepts B as a payment method. NEO and B, we are here to put control of your money back in your hands. In a secure and transparent environment, you decide what happens to your future.
So this was a presentation I did in Miami a month ago before we opened. Welcome to the new economy. So this was the the main, the underline behind our advertising campaign. And it was probably the most popular advertising campaign that ever happened in Cyprus. If you have friends or relatives there, just call them and ask them in this specific voice, because it was my voice, kissing you and you. If you do this, they'll definitely see it, and they'll tell you a few things about what we're doing over there. So this new economy that we're trying to introduce, it's all about people. And in this field, beyond us, we've recruited 12 full-time employees beyond the management team. We have 25 dedicated developers working on our software. We have a whole KPMG there in Kenya, in the US, and in Europe working on providing services to us. And we have 2 specialized legal services to cover all the legal needs on the island. At the same time, I don't want to bother you with lots of details, because this will happen. So this is how the branch looks now, essentially. This is a render, but if I took a picture, it would be exactly like it is now. And next to it is a picture of how it looked early January, so it's unfair. There's another service that we're building that will be accessible from most countries in Europe. Greece is excluded, unfortunately, for now. And you'll be able to buy Bitcoins very, very easily and send them anywhere to your personal wallet. This is a payment network that a lot of merchants in Cyprus are very excited about. This is essentially, we're offering them the physical practical advantages of using the credit card and accepting instant payments only without any of the transaction fees that were included before. So this means that they can have a website on which they accept payments. They accept 100 euros from the US, they get paid 100 euros exactly the next day. Because we have a very vertical business, we don't have to be profitable on every single thing that we do. So this is something to promote more adoption. We will be going the direction of the Cyprus investment firm in the future to be able to give investment services and actually provide more security to the users of this service, which was one of the mistakes that non-folks did. And we're building a trading platform in the background for this, but essentially we'll be building big ATM machines, and we'll spread them around the island and in partnering countries very soon. But our issue was counterparty risk, which essentially is what happened to Mt. Gox. People transferred their money and their Bitcoins to a 25-year-old French guy who had never run a multi-million business before. And Mt. Gox essentially means magic, the gathering, online exchange. This place started as a place for friends to trade gaming cards, not Bitcoins, not anything monetary or significant monetary value. So, the system that we're taking in place to ensure that this never happens is a system that's available to the Bitcoin protocol, and it's called multi-signature transactions, which means that the Bitcoins are stored in a safe deposit box protected by cryptography. And there's 3 keys for accessing these. The user has 1 key, we have 1 key, and another third party that we both trust holds the 3rd key. Now this means that if we vanish, your Bitcoins are still there. We cannot access them on our own. So we're essentially a holder of one of your keys. And we have very express permission from the trusted third party that we will access the Bitcoins with them only on production of that certificate from the person who actually owns the key. So it's to protect their heirs, because otherwise the Bitcoins are untouchable by anyone. So building all these, I don't know if you've heard the phrase that, or the saying that goes, building a startup is like being thrown off a plane with all the mechanical elements of the plane, and they tell you that build the plane before you crash, while you're flying, while you're falling in mid-air. So this would be a very, very appropriate example of what's been happening to us. I have professional business training. I've worked in businesses, developed businesses before, the last 15 years at least. And let me tell you, a startup is nothing like what you read on the books. There's no time for KPIs, there's no time for business plans, there's no time for project planning. You just fail forward while you're doing everything, and you hope you will be able to build this plane before it actually crashes and you run out of funds, and you have to sell away your company for peanuts. So it's a very demanding process, and it's something that takes a lot of energy and needs a lot of love, and you need to inspire the people working with you, and you need to be inspired by them. So there's no separate responsibilities. Everybody's trying to fix everything at the best of their ability. And when you see the need for more organization that will spring out of this chaos, then you develop everything. Then you start actually choosing software on which you do your project planning, you plan your KPIs, you do everything on a more structured manner, because you see that the need for organizational management in the company, it actually emerged from within the people, and everybody saw eye to eye. In the beginning, it's not the case like this. It never happens like this. So,
Mr. Papageorgiou,
yes.
can we allow some time for questions and answers from the audience, because we
1 minute to close,
Okay, yes,
and we're doing. So, anybody of you interested in working in a startup, I'd say just keep 3 F's in mind. It's a fail, fast, forward. Because you will always fail. Something will always fail. And that's the only truth about startups. There's systems that will fail. And even if you succeed, you will still face failure. Because that's probably the worst thing that could happen to you if you're a startup. Success means you need to scale. Success means you need to expand your operations. You need to get more funding. So, fast means do whatever happens, and if it fails, move on as fast as possible. Don't sit around. And forward means learn something from this, adapt it to your future expectations, so that when you repeat the whole experiment again, you're more knowledgeable and you have more wisdom. So that's it for me. Any questions? Let me know.
We can allow the questions because we're running a bit behind schedule and we have the next speakers already in the room. So can we have a question?
Thank you for an outstanding presentation and for sharing your expertise with us.
Thank you very much.
I have one quick question, and I'm not sure if I'm understanding this right, but I have a question for you. Are you essentially disintermediating banks? Are you Bitcoin? I'm not sure personally, but Bitcoin. Is it replacing banks, or is it substituting banks? And if so, are we in the beginning of a financial war?
Okay. Let me ask you a question with another question. Did email destroy the post office? Did the internet destroy libraries? It disrupted them, but it didn't really destroy them. There will be needs. For instance, one of the main things I can see banks doing is debt, as they're doing already. But you can't have debt in Bitcoin. If you don't have the Bitcoin, you don't have anything. So you can't offer promissory notes on Bitcoin, which does not exist yet. So there will always be a need for debt. There will always be a need for debt-based instruments. So I see banks doing a very good job there, and they'll have to adapt. You know, disruption isn't something that you choose when it happens. It just happens. And to bring back the discussion about the systemic risks, that there are no systemic risks on Bitcoin. If the banking system was not one huge systemic risk waiting to happen, there would not be a need for Bitcoin in the first place. So, businesses should be allowed to fail, and they should be allowed to die in peace, not taking future generations with them. So, the larger the systemic risks is, the more the need for decentralized, robust, and anti-fragile systems will be. So, I don't know if I answered your question. I don't want to give a direct answer, yes or no. But I think I created a general landscape. Thank you.
Thank you again for the very interesting presentation. I would like to ask you to make a rough estimation about how long it would take in today's financial insecurity and hardships that we globally face for us consumers and small and middle businesses, not only billion and million businesses, to adapt into this technology that may seem strange and maybe insecure and may seem insecure, when in fact I personally am convinced that it is not. But a rough estimation about how long it would take.
See, there's a telescopic way that things keep changing in the invention of new technologies. So if this was the 90s, I'd tell you that we'll probably need 10 to 15 years. But judging from the uptake that we've seen so far, I'd say the next 5 years, that anything that will have happened with Bitcoin, it will show in the next 5 years. But on a business perspective, and if you're a merchant and you want to accept Bitcoin for your businesses, I'd say go for it right now because you have absolutely nothing to lose. That's it.
One last, please.
I don't really need it. I'm not an economist. I don't know anything about IT, but I do know how taxation works in Greece. I'm not an economist. I don't know IT, but I do know things about taxation. So, are bitcoins going to be taxed?
Depends on how you see it. The question for anyone who didn't hear it is about the taxation regime and how Bitcoin will be classified on a tax perspective. So Germany has classified Bitcoins as financial instrument, which means that if you're holding them for more than 1 year, you're holding them for investment reasons, long-term investment reasons, or they're not taxing that. If you're holding them for less than 1 year, you have to pay capital gains tax on Bitcoin.
Yeah, but if I make a transaction, am I going to be taxed?
So she means when the transactions are taxed.
Why?
By the government?
I don't know. There is no country in the world in which the transactions with Bitcoin are taxed per se, the transactions per se. So this means that if I sell a product which is liable for VAT, for instance, you should still be liable to pay that same VAT, regardless of the means that you're using. If you're buying Bitcoin for speculative reasons, you need to pay taxes if you have capital gains in the year's end. So it's the same outline came out from HMRC, the UK tax authority, Her Majesty's Revenue and Customs. So they said the same, that Bitcoin essentially it's like money, but it's not like money when it comes to the characterization, but for tax reasons it's treated as money. So it's like transacting 10 euros, it will be a 10 euro transaction, it's the same thing. You don't pay any taxes for the transaction per se. You pay taxes if there was a capital gain involved, and if there was a sale of a product involved. So you pay VAT. Is that clear?
Yes.
We don't know exactly what's going to happen, that's the thing. We're trying to help regulators as much as possible, but it's like trying to fit a round peg in a square hole. It doesn't really fit everywhere. So there either must be an approximative regulatory authority to actually come up with something, or there needs to be a regulatory square around hole. Put this one in a new one.
Thank you very much for your speech. The way I understand it, you have to come back and you should take this meeting forward. Introduce the next speaker. Thank you very much.